Hello again, this is Alex with MasterChartsTrading.com, and today is Saturday, October 6th, and this is a recap for Friday, October 5th, 2018. So first of all, please hit the like button. It's very important to keep this channel going. We'll pretty much do everything the same. We'll look at stocks, small caps. I'll give a little bit more examples, a little bit more details. So, for example, small caps. We'll look at home builders. We will look at Tesla and where to place bearish bets should you so desire. We'll look at emerging markets in a little bit more detail in some of the countries such as India, Philippines, and Brazil. Junk bonds continue to move lower, as actually their other bonds as well. And we'll look at a little bit more detail at Canadian, Mexican, and United States dollar situation as it relates to NAFTA, Mexican peso rather. We'll look at oil, energy, natural gas, and cryptos as usual. And let's start with S&P 500. This is SPY, S&P 500 ETF SPY. So latest greatest alert was on the 28th of June 2018. You can clearly see it's resulted in a nice gain, about, let me see, over 8% gain. So I usually hold my positions for a significant amount of time, usually between a few weeks to a few months sometimes. Occasionally I just, if the position is profitable, then I don't see why sell it. So here's actually an example of my position. I have a CSX position open. I had it open for a while. You can see the anatomy of a trade. I entered way back in April of 2018. It went in my favor almost immediately. I sold half, moved my stop to entry, and it just continued trailing it, and it just keeps going. So I sold another half here, a few months later, but the rest, a quarter of the position I'm still riding. So in general, you can keep stocks for a long time, so long as they make sense and you can also get dividends from them. But I digress. So first, let's look at S&P 500. So here is SPY. This is clearly a bullish chart. Don't see too many issues with it. One chart that I wanted to highlight is small caps, and you can see small caps coming down toward these blue indicator lines. By the way, if you need to find out, more about these indicators, please go to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on Alerts and Indicators, and there is a grid here. You can also look at my indicators on TradingView. They're published ideas there. So these indicators here, basically they're showing, the green, the blue, the red, and the yellow lines. They show price action. They show where to look for a good buying opportunity and where to exit. So I pretty much exclusively use my own indicators for trading. As an aside, we are working together with actually several other people, 2 traders and several business development people, to hopefully improve the layout of MasterCharts and possibly spin it off into a custom level service. So right now we pretty much everybody gets the same thing, but we're hoping to start offering a custom platform or a custom stocks, for example. So anyways, on the small caps, basically we're seeing a pullback towards the blue indicator line, and this is for me a pretty clear opportunity and not a signal to sell. A signal to sell would be a close below the yellow line, and obviously that hasn't happened yet. So overall, stocks in the United States are bullish. SPY, QQQ, Dow Jones, small caps. So pretty much the entire stock market of the United States is in a bull market. As far as the rest of the world goes, that is an entirely different story. Well, let me talk about home builders and Tesla first. So home builders, diversified home builders, XHB. We actually traded it well, at the MasterCharts Trading, and eventually you can see that the price action was kind of difficult to read for a long time. Throughout February, March, April, May, June, July. Finally, in August, we see a breakdown. I'm gonna zoom in on it. There's the breakdown on August 13th of 2018 of this year, and you can see that afterwards, I basically said avoid. So I sent my subscribers at MasterChartsTrading.com to avoid this instrument. Some people are more aggressive, and they're interested in actually shorting equity, which is fine. And you had an opportunity basically to short. I like to short on a breakdown. Not a particularly crazy about shorting at the yellow line. I preferred for a bounce to the red line, and you can kind of see right there around 27th of August. Came down basically around that area, and that's how we trade. We look for a trend and then a bounce in the opposite direction of a trend, and then we are going to get into position into the direction of a trend. So in this case, if the trend is down, because notice here we see a breakdown on the 13th of August, we see a counter trend bounce, and now we need to short it. So home builders basically avoid it. Some people like to short it. Here's an example of Tesla. Here's an example of Tesla. You can see the way I think about trading. Now, once again, I am not in any way advocating shorting equity, especially during a clear bull market as it is right now. So we have S&P 500 in a clear uptrend. Tesla here got really volatile of late, but the way I look at this chart, without any emotions, without any personal feelings, is simply looking at this chart. Here it is on September 7th, 2018. I see a breakdown below this yellow indicator line. You can find out more about those at MasterChartsTrading.com. So this to me is a sign that the price has confirmed a bearish direction, and now we will need to either avoid it, and usually this is what I do. I simply do not trade stocks on the downside during a bull market in stocks. Even a general stock market such as SPY, S&P 500 or Dow Jones is in an uptrend, I usually avoid shorting equity, avoid shorting stocks. But in this case, if you're just interested in an example, here it is how to do this. So we have a trend change to down, a bounce towards the red indicator line, and now we see a close below it. So there is a good opportunity to short right there on September 17th, and you can short it by buying put options. So in other words, where would you place a bearish bet? In this case, a bearish bet would be at around 298. And you can see that a few days later, you would have been rewarded almost with a 10% gain. The day after, it jumped again. But notice that just a few days ago, on the 3rd of October, you can see a breakdown right there below the red indicator line and a nice push lower. So, so far, the way I'm looking at Tesla, it is bearish, and I would avoid it for now. Who knows what's going to happen in the future, but we're simply trying to be objective and look at the chart and try to keep our emotions out of the analysis. Okay, so we have covered United States markets, which are bullish. Now we want to look at some of the non-United States markets, and let's concentrate a little bit more on emerging markets this week. So emerging markets, the general emerging markets, fund is EEM, extremely popular fund, and it can be pretty much traded, very high liquidity, in other words. So to me, this chart looks bearish. Here's that breakdown, bearish breakdown, on 27th of June 2018. Basically, from then on, I'm only thinking about either avoiding or closing my positions, or actually placing bearish bets, on the decline of this instrument. Where would I place bearish bets? Me personally, I prefer for the security to bounce significantly to around this red line, and then place the bearish bets. But you can see that the instrument is extremely weak and it barely bounces. And you can see that the aggressive short sellers have been rewarded of late. Is this going to continue? Nobody knows, obviously. Again, nobody really knows anything about the stock market, cannot predict the stock market. There is no way to predict where the stock market will move. So you must keep it in mind. And therefore, a failure analysis is very important. Not 100% of your trades will work in your favor. So you will need to figure out how many dollars you are losing on your losers and how many dollars you're making on the winners. And if you're making more money on the winners than on the losers, then you should be in good shape. So emerging markets currently, moving towards fresh lows, basically. Within emerging markets, some standout performance is by Indian stock market. You can see that it collapsed almost 16% in just a few weeks, really, from early September. The same way to think about it. Here is on the 23rd of May 2018, I see a breakdown below the yellow indicator line. You can find out more about it at MasterChartsTrading.com again. The point is that from here on, I am only thinking about selling. I'm not thinking about buying yet. When would I be thinking about buying? If or when we see a close above the blue indicator line, which is above the price action currently, obviously. So here we can basically short on breakdown. And I like personally to short on breakdown, and here was a good opportunity on 13th of August. Another one was on the 4th of September 2018. I would have put my short stop up here above the blue indicator line. So in other words, if the price closes above the blue indicator line, then I'm going to close my short position. This obviously didn't happen, and if you shorted here on September, you would have been rewarded with a beautiful 15+% gain in your favor. Now this looks pretty straightforward oversold, so I will expect a bounce. I will expect to bounce to probably 25 bucks. So a sharp bounce is in order. $24.70, $25 here. Okay, another interesting chart was that of Philippines. Also another strong losing chart. So similar general principle. Original breakdown occurred in March of 2018, where my pointer is hovering right now. We see a breakdown below the yellow indicator line, and you can see that basically from then on there was nothing but selling. But I personally prefer to short, higher around the red indicator lines. So I would have shorted around here, around August, 10th of August, or again around 30th of August. And if I did this, I would have been rewarded with about 11, almost 12% gain in your favor, obviously. So what does that mean? Emerging markets are under severe pressure. Here's another one, actually, not Z, but EWZ, I meant. EWZ, this is Brazil. Same general principle. We see a breakdown, the original breakdown, the one that put Brazil into the bear market occurred on the 5th of June 2018. From then on, we basically entertained bearish outcomes. Here is one such possibility on the 6th of August, and we're actually right there right now. So if I want, if I was hell-bent on shorting equity, and I'm not really, potentially we can sell, buy puts here, or buy an inverse ETF, or outright short. So overall, Philippines, just pretty much all of the emerging markets are in downtrends. Let me briefly cover Europe, same thing, VGK Europe approaching for fresh lows. We can do also EZU, European Eurozone, EWG Germany, EWU United Kingdom. Everything is in a bear market really. So I'm avoiding pretty much most non-United States markets. I'm pretty much avoiding. As far as Japan, so here's EWJ. This is not a great chart, and actually it's approaching really dangerous levels. I would say that if we see a break below 57.79, we could see a strong move down for the Japanese shares. So we got Europe, Japan, emerging markets. Here's China, same thing, approaching fresh lows. Now we will get to NAFTA countries in a few minutes because I want to tie them into the currency fluctuations. Briefly, here is TLT, the 20+ year Treasury bond fund. Here, I thought maybe, TLT, the long-dated treasuries, are finally recovering, but this clearly did not happen. And I actually put this arrow here in real time on one of the previous videos. So, like I said, these are conservative short levels, smaller risk versus a trying to short down below here. But you can see a very nice gain. Definitely, quote-unquote, oversold, and I think it's gonna bounce. I am expecting a bounce to like 118, possibly 119 even for TLT. Junk bonds, like I said, they kept worrying me before. Now they worry me even more. You can see, especially this Friday, look at this candle. It's a big red, lots of selling basically, and you can see that the close was near. The close was at the low of the day. So in other words, investors were selling into the close at the very end of the day, into Friday even. So this looks to me like a classical bearish chart that should be shorted and or avoided, which again worries me because stocks, S&P 500 and junk bonds correlate quite highly to one another. So perhaps junk bonds are already trying to show something to stocks. Perhaps stocks are ready to roll over. It's difficult to say, but for now, S&P is in an uptrend. Junk bonds are in a downtrend. So we will need to act accordingly and just look at the charts and try to avoid reading too much into them, because sometimes I tend to overthink myself sometimes. So here, junk bonds look to be in a downtrend, and I would avoid them. Alright, so let's look at some Forex action, including NAFTA countries action. Alright, let's continue to the Forex action. First of all, on this chart you can see 4 different lines. You can see the green line, the blue line, the red line, and the yellow line. You can find out more about them at MasterChartsTrading.com. That's MasterChartsTrading.com. Click on Alerts and Indicators. Here we see a graph of United States dollar index. The breakout occurred in May of 2018, late May of 2018, right there, 25th of May. From then on, we entertain only bullish possibilities for the corresponding currencies, from which the index is reconstituted. So euro, British pound, Japanese yen, Canadian dollar, and Swiss franc, and there's also a little bit of Swedish krona, but it's difficult to trade it. So today I wanted to highlight a couple of trades. One of them would be the Canadian dollar, Mexican peso, but I also wanted to boast a little bit, of course, so we can see a recent alert for US dollar versus Swiss franc. So USDCHF, if you're familiar with trading on Forex. Alert was sent on 27th of September. Now notice I trade on daily charts, therefore I hold my position, for days on end. That's fine, it's up to you if you are comfortable with it. You can trade intraday. My experience with intraday, such as minute or hourly charts, is that I, more often than not, I have a lower success rate on the intraday charts. With daily charts, I have quite a high success rate. So you must calculate your position based on the amount of money you have in your account, and also based on leverage. And so your interface, your brokerage interface, should allow you to do that. And even though this stop looks like very large, because notice I would have entered, I'll show you my Japanese yen trade in a few, but here alert was sent at 0.97770 with a stop well below here, with about 270 pips stop. Now again, you will need to calculate your position accordingly, and depending on the size of your account, this may or may not work for your account. But even for smaller accounts, you can still get to practice. And what's important in trading is that you get confidence in execution and confidence in looking at charts. Here, alert was sent with a relatively wide stop. What I usually do is, upon reaching my target, and my target was one average true range. So average true range was, in this case 62, about 62 pips or so. But actually it went well past the target. So usually at one average true range, if you don't understand what ATR, ask me, send me a private mail or an email. You can find out more about it. Upon reaching the first target, which is, for Forex, I usually set very tight targets, and actually for many instruments too. One average true range, yeah, we reached it. And at that point, I immediately sell half and move my stop to entry. And in this case, my stop would have moved to, 0.9770. And then from here on, you simply trail your remainder. Some people just like to sell the whole position. Some people like to do it in quarters. I like to sell half at my first target, move my stop to entry, and I guarantee myself a profit. Even if the instrument collapses from here, I still already have sold a half, and I have equity, to cover such eventuality. So this trade obviously worked really well. Here's another position that of recently, and in fact this is my position, I still have it open. This is Japanese yen, so US dollar versus Japanese yen. Here I didn't really screw around, I just simply entered right above my indicator lines, around blue indicator line. I entered at around 111 or so, almost even 111. Position kind of meandered, did nothing. Put my stop well below the red line here. Position meandered, did nothing. Then finally it broke out here on the 13th of September. Sold half here, moved my stop to entry. And, it just kept going. So here I'm like, okay, on the 21st of September, I'm seeing this potential top-in pattern. So I'm like, okay, I'll sell another half. So in other words, I sold half of my remainder. So I have another quarter of the position left, and notice that it continued higher. So I'm still trailing my other position. Eventually I'll close it out. But the point I'm trying to say, this is about a 360 pips gain that you can make. And if you trade Forex, then you realize that this is a very large gain, and with leverage that translates into a sizable amount of dollars. So let's continue to NAFTA countries, and here is one of those, that is Canadian dollar. Okay, so NAFTA countries, here's Canadian dollar futures. Now I am recording this on Saturday, and you can see market closed. There was a data adjustment, and here why I think this happened. Notice that I'm going to zoom in on this price action. Notice that the price actually closed below the, well, I'm going to change the color to purple so that you know what I'm talking about. So here's that same indicator but with purple line. You can see that there was a close below this line, and to me this would be a bearish indication. On Friday, October 5th, before the market closed for the weekend, the price action was not as equivalent. In fact, here is a screenshot that I published, that I sent to a friend of mine on October 5th at 9 p.m. October 5th is a Friday, so it's after the market close. You can see that the price action just exactly, you can see that the price closed exactly on the indicator line, so I couldn't make a decision whether or not to short the Canadian dollar. But here the decision is kind of getting made on my behalf, because you can see that the Canadian dollar futures are actually breaking down. So maybe when the markets open Sunday nights, maybe Canadian dollar will continue lower. You can see that there's NAFTA news galore currently happening, and there's some China stuff going on there as well. And it doesn't look like the deal is done, honestly. I want to say that the Canadian dollar could continue lower. This would imply that the deal is not done. So we will just take it one day at a time. Let's look at the other country that is NAFTA, in a NAFTA agreement, and here is US dollar versus Mexican peso. So we can look at Mexican peso futures just for ease of comparison. So here are the Mexican peso futures. You can see a breakout in July here, and from then on I basically think about buying. Good opportunity here on the 13th of September, and a big surge here on Friday. This is a significant surge. So if you are trading Forex, you can do US dollar over Mexican peso. You can see big selling here in favor of Mexican peso. So in other words, Mexican peso is getting more expensive. This is one of the few currencies worldwide that is currently in an uptrend versus the dollar. Pretty much everything that I see, a vast majority of currencies, if not all currencies, are in an uptrend, in a downtrend versus the dollar. Mexican peso is the only one that I am aware of which is an uptrend. So it's a very interesting situation, and if you like to try to compare it with the current world news, this most likely means something. I'm not a big fan of comparing to world news, because there's a tendency in your mind to associate technical trading with trading on news, and I guarantee you, no, this is not it. We do not trade on the news, that's for sure. I trade specifically on technicals, and here the technicals are telling me that Mexican peso is most likely going to appreciate. So briefly, let me look at the Mexican stock market. EWW looks bullish, but not very strongly bullish, or rather, it's not a very clear chart. We can see a lot of back and forth basically, but This chart I think is bullish, so I would be probably buying. I would definitely be buying it. I would definitely not be selling it. And here's Canada EWC, and this one is also not as straightforward as S&P 500, for example. Kind of just meanders here. So overall, I don't think there is, NAFTA deal is done yet. So I think there's going to be more back and forth before anything is really finalized. Okay, let's continue to commodities. So here's oil futures on a daily time frame. Fresh highs just a few days ago. So oil, as I kept saying, is an uptrend. I would look for a buying opportunity. And then, basically, if we see any kind of pullback, I think we should be looking to buy it. Now, I was hoping for a pullback towards the blue indicator line. It got almost to the blue indicator line. Didn't really quite touch it, so I didn't really send any alerts to my subscribers. But I did send a oil-related play to my subscribers, and here's XLE, the energy sector ETF, and you can see 1, 2, 3 alerts here, basically all successful. Latest one occurred on 14th of September, and yeah, we're moving in the right direction. One of the oil plays that we traded is ExxonMobil. Here is that play. Now again, you can see the arrows here, up arrows on the 29th of June and another one on the 25th of July. And to put this in perspective, I put my stop at the yellow line for the equity, for the stocks. So even though we can see that there was a big dip here into mid-August, we would not have been stopped out because our stop would have been even lower. And we would have been rewarded by waiting this out and finally a breakout. But if you are more of a short-term trader, then you can look for simply breakouts, such as occurred around September 11th of this year, for a nice 5+% gain. And I think this stock is set for more gains. All right, natural gas, one of the most volatile securities out there. So I'm not really rushing to buy it. You can see that this is a natural gas futures continuous contract. You can see that kind of came up to this blue indicator line, tried to rally above it, but eventually closed below it. So I'm not yet convinced that natural gas broke out. In fact, the risk right now to short is like ridiculously low, because this is all, if you short up here, then your stop would be just above the blue indicator line, which is a few points. The gains, if it goes down, especially if it gets down to this red line, I think we can again short it. And I actually did that twice already. You can see there was one in May of this year. I opened a short in May of this year, and another one in August. And those downward pointing arrows is where I shorted natural gas, made profit, and then I closed my position. So both of those transactions were profitable. Here I have not. You can see that we came up strongly above the red line, and I did nothing. I'm just kind of sitting there and doing nothing. I have no positions right now. But it does look like it could break out, or it could also continue lower. So right now I'm just kind of staying out of the market, basically, for natural gas. All right, let's finish up with cryptocurrencies. Here are the Bitcoin. Here's the Bitcoin. Nothing is happening, basically meandering near the lows. You can see the trading range is narrowing, continues to narrow. So there is now a greater and greater chance, if the bulls decide to take control, they need to rally around 40% to 9,500 or so for the Bitcoin to become bullish once again. by comparison, just a few weeks ago, let's say in August, the bulls would have bulls would have needed to push the prices higher by 132%, or over $8,000 per Bitcoin. So this is what's called a trading range narrowing, and it's possible now for the bulls to take over the initiative. Same goes for Litecoin, narrowing trading range, but the price itself is moribund. Ethereum, actually one of the weakest ones, but also trading range is narrowing. EOS USD, also not really doing anything, just kind of trading near the lows. And Ripple XRP USD, I highlighted it last time. Same thing. You can see that really tight trading range. So I would be kind of looking out for a possible breakout now, especially if this security decides to move higher. And in this case, all we need to do is just a little bit of a move, really not that even much from current levels. We need to move, well, it looks like a lot, 80% move or 39 cents, but in the context of this graph, it doesn't look like much. It can easily move that much, because you can see the, on average, this is how much the security moves, about 59, or rather about 6 cents basically per day. But this can happen. Notice this big spike here. So I would be on the lookout for a possible trading range further narrowing, and maybe even a reversal into a bull market, but it's premature to say that yet. Alright, please hit the like button, please share this video. If you're ready to sign up, head over to MasterChartsTrading.com, click on alerts and indicators, and then sign up for one of the plans. Most people sign up for alerts and indicators because you get to trade on your own. All you need to do is have a free TradingView account, and I will share my indicators with you. So these 4 lines that you can see on the charts, can be on your chart as well. We're additionally going to be working on converting the indicators into NinjaTrader, possibly Sierra charts, and most likely for MetaTrader as well in the near term. Alright, thanks for watching, and have another great trading week. Bye-bye.